Welcome back to Explain the Charts, everyone. Today, September 25th, 2025, we're focusing our attention on the GBPUSD pair, which has seen some dramatic movements as the US dollar continues its rally. Let's start by looking at the daily chart to grasp the broader market sentiment and how recent news has shaped its trajectory. The overarching theme, reinforced by current news, is one of US dollar strength and a struggling British pound, largely driven by diverging central bank policies. Observing the daily chart, we can see a significant upward trend that culminated in a recent two-month peak of 1.37264 on September 17th. This stellar rally, as some news outlets described it, came ahead of the U.S. interest rate decision and was followed by a sharp reversal. The Federal Reserve's decision last week to cut rates, though framed cautiously by Chairman Powell, initially caused some volatility, but the sentiment quickly shifted back to dollar strength. The subsequent decline from that 1.37264 peak has been quite pronounced, indicating a clear bearish short-term trend in the wake of the Fed's stance. Let's zoom in on the most recent daily candles, specifically from mid-September onwards, to see the extent of this downturn. Here, we see the price breaking below crucial technical levels, echoing the Investing Live report that stated GBPUSD has broken below a cluster of key technical levels. Specifically, the 100-day moving average at 1.3484, which previously offered support, was convincingly breached, marking a significant bearish signal. Furthermore, the pair fell below the 50% retracement level from the July 1st high at 1.3463 and descended through the swing area between 1.3445 and 1.3467. This technical breakdown aligns perfectly with Bank of England Governor Bailey's comments yesterday, September 24th, suggesting further room to cut rates, which added to the downside momentum for the pound. Now let's switch over to the 15-minute chart to get a granular view of the immediate price action leading up to today, September 25th. We can clearly see the testing of the key support level at 1.3440, a point highlighted by investing.com as a confluence of various trend lines and horizontal support. On September 24th, the day closed at 1.34491, just above this critical level, indicating that sellers are pressing hard, but buyers are attempting to defend it. The zone between 1.3463 and 1.3467, identified in the news as close resistance, now acts as a significant hurdle for any potential rebound. A rebound on September 22nd to 1.35136, daily close, from a two-week low of 1.3453 was short-lived, confirming the market's strong bearish bias. Today's price action will be crucial, especially with upcoming U.S. data releases, as the market digests the implications of sticky inflation and differing Fed views. Looking ahead, if the GBPUSD fails to hold above the 1.3440 support level today, a continuation of the short-term downtrend is highly likely, with targets at 1.3360 and then the September 3rd swing low of 1.3332. The Reuters report of GBPUSD trading lower this morning further supports this immediate bearish outlook. However, should the 1.3440 support remarkably hold and buying pressure increase with positive UK news, we could see a push towards the 20-day simple moving average, currently near 1.3520. Breaking above this would then open the door to revisit last Friday's high of 1.3559 and potentially the 1.36 and 1.37 marks, though this scenario appears less probable given the current macroeconomic headwinds. For short-term traders, volatility around the 1.3440 support and 1.3463 to 1.3467 resistance will be key, offering scalp opportunities. Long-term investors should monitor global risk sentiment, especially with geopolitical tensions mentioned, as this could further bolster the safe haven US dollar. To recap, the important price levels to watch for GBPUSD are the immediate support at 1.3440. A break below this level makes a move to 1.3360 highly likely, with an 80% probability, reinforced by the prevailing USD strength and BOE dovishness. If 1.3360 is breached, the next significant support is at 1.3332, a 70% likelihood under current conditions. On the upside, immediate resistance lies between 1.3463 and 1.3467, and then the 100-day MA, which is around 1.3484. A sustained move above 1.3500 and the 20-day SMA at 1.3520 would be needed to turn sentiment bullish, a 30% likelihood in the short term, requiring unexpected positive UK data or a significant shift in Fed rhetoric. Keep a close eye on the U.S. August personal income and outlays report tomorrow, September 26th, at 13:30 UK time, particularly the core PCE inflation data, as it will heavily influence Fed policy expectations and thus GBPUSD's future direction. Thank you for joining Explain the Charts, and remember to stay agile in these dynamic markets.